What's up, guys? How are you? We got Insiders Update. I'm going to show you some stuff that you have not seen before. I guarantee you that. I guarantee if you stay for this whole video, you're going to learn a ton of stuff you're not seeing anywhere. So we just had the inauguration today of Donald J. Trump, and a lot of people are scared. A lot of people are optimistic. And we're going to cut through deep and go deep on a few things here that he's going to affect, and that that's affected by him. And it's something that's fun. We do this once a month. We do our Insiders Update. It's a macro level look on the markets, and we do once a month. We do our updates, our Insiders Updates, and we also do our micro level. We do our Oakland County look, where what's going on at the real estate market in micro level, which gives you a good picture of Southeast Michigan in general. But this is the macro level update. So we do this once a month. We do the micro level look once a month, and we go deep on this one though. And I guarantee it's stuff that you're not going to see anywhere else. And I'm Brandon Gentile, the CEO and the founder of the Legacy Group here at Berkshire Hathaway Home Services. We're based in Oakland County, Michigan, and we have a budding team, an awesome team, a group of just awesome people, and we're super excited about what we've got going on this year and the success we've had in the last few years, and what we have coming up is just awesome. And things like this are things that we're super pumped to do for all of you, and to get this out there and to go deep and raise the level of discourse, as I'm always talking about in all these videos. So it's something that is really a passion of mine. It's nice because in real estate you can kind of talk about everything. You can talk about the global economy, and because it really affects all of us. It affects my job, the business. It affects everyone's lives because it's really your livelihood. A lot of it's tied up into real estate, right? Your homes or investment properties, whatever it may be. So again, this is something once a month. If you want to go deep, if you want to know what's going on in the global markets, I suggest, please, share it, turn on the notifications. Do me a great favor. We spend a lot of time. I spend countless hours. I think I said it last month, but to the detriment of my own health, I spend, an ungodly amount of time researching stuff and looking at stuff and analyzing graphs and charts and you name it. And it's really a passion of mine. So it's something that's fun for me, but I also spend a ton of time doing it. A lot of my team spends a ton of time helping me do it as well. And it's something that, like I said, I want to give back and provide value to people. But please, share it, like it, tag people in the post that might get something from it, or might be interested in the same type of thing. They're interested in the macro market and things like that, the high level 30,000 foot view of stuff. But please, if you're interested, turn on the notifications, because we're going to be doing this stuff. We're going to be starting to do video every day, basically, and a couple of these deep ones a month. So, and some of the other videos weekly are going to go fairly deep as well, and really touch on some different stuff that I guarantee you people are not talking about anywhere. You're not going to hear it in the media. You're not going to hear it in the mainstream media. You're not going to hear it, on most blogs or whatever. You're not going to hear it at the dinner table. It's just stuff that people don't talk about a lot. And a long time ago, I just, kind of looked at everything and just said, wow, this is, we're being lied to. There's a lot of stuff that's just, being covered up and being lied to. And if you go back and watch the December Insiders Update, because it talks about a lot of the stuff, that we're not being told in the Fed. We're going to talk about the Fed here quick too, but a lot of stuff you're not told, and we're not told about growing up or, at any time in life. It's something that we all need to kind of take into consideration, really. So, by the way, a good book about the Federal Reserve. If anyone's wondering about the Federal Reserve, I know it's a really fun topic, but The Creature from Jekyll Island by G. Edward Griffin, awesome book. Kind of explains, a thick book, but it's an awesome book that explains the Federal Reserve and what happens, how it came about, how they made it. It's mind-blowing. It'll just it'll completely rewire your brain and blow your mind. I guarantee you that. So you want a good read, that's a good read. It'll really open your eyes on stuff. And that's one of the books that really got me into all this. That's one of the books that just opened up my mind and really got me thinking, like, wow, we're not being told this and what this really is. What else are we not being told? Then it just kind of started, me down the rabbit hole. And what else can I find? And you start finding things. And it's scary at first. And these videos aren't meant to scare people, but they're just meant to enlighten people and know, hey, this is what we're working with. That's all it's about. Education, plus action is power. So, but you got to know it. Half the battle is knowing it and knowing what to look for, right, and being able to take action on it. So the Fed. I'm going to read some stuff actually from Forbes. We have one of the recent Forbes articles in one of the Forbes magazines talks a bit about the bond situation and the Fed, the bonds, things like that. There's some quotes here from there. Obsession of the Federal Reserve and other central banks with keeping interest rates at extremely low levels has grossly inflated both the government and the value of both government and high-grade corporate bonds and sets up fixed income investors for potential disaster. The 30-year U.S. Treasury currently yields 3%, but for investors in the 40% income tax bracket, the net yield becomes 1.76, and even with very low inflation of 1.8, that's almost a negligible annual real return on capital. So, and then he goes on to say down here also, your odds of making money in casino are certainly no worse than they are in the long-term Treasury market. So it's scary. There's a lot of people have, I don't even have it written up here, but we kind of touched on it last time too. Just, the CalPERS and some of the big pension funds, just the things like CalPERS, they expect a 7% return, with what they're getting for their pension funds. And they're getting like 0.9%. Well, how is that going to benefit anyone down the road here? Is anyone going to have any money for retirement? So that's where I really want people to start thinking outside the box and really start thinking, where do we need to go? Where do we need to be? What needs to happen, in order to, survive, really. And it's again, it's not, I say that because it's a term that kind of gets people's attention, but it's really how do I keep this way of life and help sustain my family, and this is why it interests me so much, but it's a huge problem. It's a huge problem. What the Fed's doing, them just printing money, the Keynesian way of life, and that's really where all the central banks are at right now. Central banks are just printing money like crazy, and it's going to be an interesting end game here. That's for dang sure. We have another one here in Forbes. The same guy, he's talking about same stuff, pension plans. There are a total of 1,260 public companies in the U.S. that have reported pension data. Of these, 95% are underfunded. Of the pension plans that reported, 95% are underfunded. I mean, take a step back, and what does that mean? They're underfunded. That means they don't have the money that they're supposed to, that they are supposed to pay people out when they retire. That's mind-blowing. The average underfunded plan has a ratio of assets to liabilities equal to 69%. A similar pattern is seen in the underfunding of municipal and state pension funds. Of the 92 state retirement systems that reported actual data for 2014, 87% are underfunded, with the average fund being under its actuarial requirement by 27% by the end of 2014. If this damaging Fed policy continues, the U.S. government may have to provide pension and IRA owners with some means of support at a cost that would probably run into the trillions, taking down the dollar in the process as bond buyers lose faith in the currency. Such action, if it occurs, would force interest rates to rise and spark massive inflation. Well, that's interesting. That's very interesting. And it's, again, something that you're not going to hear. You turn on the Business Channel or whatever, CNN, Fox News, whatever you're turning on, the local news, you're not going to hear that anywhere, right? You're just not going to hear, a lot of the guys, I like Forbes, they're usually pretty good. Robert Kiyosaki, we touched on it last time, a lot of the big mentors that I study and read and follow a lot, Robert Kiyosaki, and I listen to his podcast a ton, and a lot of guys, Mike Maloney, they're guys that, I've studied for years now and really learned so much from. And these are guys that have been talking about this for so long. Harry Dent, Jim Rickards, Richard Duncan. They're all guys that, they're talking the talk that we should be hearing. The news is going to tell you the things you want to hear. The news isn't telling you the things you need to hear, right? So it's a beyond a shell game, let's just say that. So we have, he's talking about the German hyperinflation. the important point is that higher stock prices follow the German hyperinflation and currency debacles in Brazil and Argentina. He goes into saying that, going into things, it's just interesting. This is why I like Forbes and I don't like them. Forbes is, he talks about stocks. He's like, well, hey, you should get into stocks. Well, this video is for people that, and that's fine. If people want to go into stocks, people want to really not pay attention to what's going on, that's fine. This video is not for them. That's totally fine. To each his own, right? But this is for people who are serious about, keeping their money, making more money, and, they're suggesting to go into stocks. Well, why would I go into stocks when, or paper assets, stocks, bonds, mutual funds, CDs, when I'm losing money every month? In a lot of places around the world, they have negative interest rates. You're losing money. You're paying the bank to save your money. Or I'm saving my money right now and I'm getting nothing in return. Very little in return. Or a 401k. I mean, we have right here a 401k. This is a great book, Andy Tanner, 401 Chaos. A 401k is, the people that you're saving your money with, or keeping your money with, they take no risk and they're making most of the money. With fees and all the fees. You don't even know all the fees that are in there. You couldn't even find all the fees in there if you wanted to, even if you tried. And they're making everything. You take all the risk. You pay the fees and the penalties if you take it out early withdrawal, and you take all the risk. And they don't take any risk. And they stuff on my personal channel. I'm Brandon Gentile, my personal Facebook as well. Our legacy group channel, the team, the business. We're going to be doing a lot more of the in-depth stuff on our channel. And this is something, like I said, this is something where you have to go, I know most realtors don't do this. This isn't, most realtors are, I don't know, whatever, it doesn't matter. They, they're not doing these in-depth things and telling you really where's the market going and what to look for. Not only that, I can't tell you where the market's going and I can't tell you what to do. I can only tell you to get educated. I can tell you some stuff and kind of enlighten you, but I can't be the one to say, hey, do this or do that. I have some of my own thoughts. Right here at the end, I have written, what are some of the things that an older person can do and a younger person can do? Because I have things like, what happens, it's hard for young people to save for a house right now because rent's so high, and there's very little inventory out there. So it's very hard to buy a home. So people are having to rent more and they're not being able to save up money. So what happens to them? How does that affect everything? And that's where, right now, like I was just touching on before, the stock market is at all-time highs. We all know to buy low and sell high. Everyone knows that. Everyone knows to buy low and sell high. But very few people do it. Very few people. And I get it. It's, you have to have cash available and you have to have stuff available in order to invest at the appropriate times. But for the most part, you have people that are jumping into the stock market. You have a lot of people jumping into the stock market right now and it's at all-time highs. Well, does that make sense? Does that make sense to jump into something when it's at its peak, when it's, breaking records? And, I just heard something on the other day. It was one of the business networks. I don't even remember which one it was. And they're talking like, oh, it's great. It's going to cruise right on past 20,000. It's going to keep on going for the foreseeable future. Yeah, I mean, I wholeheartedly disagree with that. So, at some point, what goes up must come down. We have a recession / depression, but we have a recession every 7 to 9 years, and we're in the 8th, 9th year right now since our last recession. So again, do the math, think critically, and don't take, an industry who is getting paid to feed you what you want. Don't take that to heart. Take it with a grain of salt instead, and it's really gonna help because it's a shell game, and it pains me. I mean, people ask me about this a lot. They know I'm passionate about it, and it pains me to see so many people that are, looking for places to go because they really realize that media is not this. I mean, if this election proved anything, it proved that the media is not on the people's side. A lot of politicians are not on the media side, and a lot of politicians are not on the people's side, and a lot of the media is not on the people's side. So you just have to be so careful, extremely careful. But again, another thing with Trump, he said some stuff during his inaugural address today. He said some stuff during the inaugural that could, spark some tension with other countries. What are your thoughts on that? what do you think is going to happen? What are your thoughts on that? And you have to kind of look like, what's he going to do? What are some things that we have to think about in terms of what he's saying? How could that affect us? If he wants to do tariffs, well, that's something I don't really agree with, doing tariffs, and that's going to increase, price. That's going to make it harder for exports. And how are other countries going to be affected? There's always the pros and cons, right? And you always have to be like, okay, what's this going to do and what's this not going to do? What's the pro, what's the con? So it's beyond interesting. And again, that's why I'm so passionate about it. But for the most of us, this all we can do is this. We can prepare. Right? It's just like being prepared for recession is just like being prepared for a disaster, a natural disaster, being prepared for the lights going out, whatever it may be. So we the Fed, everyone is printing money like crazy. Central banks printing money like crazy, devaluing the dollar. It's the sneaky tax, they call it. So your dollar is worth less and less and less. There's a quote in here somewhere. I got to find it actually. They have. Yeah, right here. The U.S. has not seen hyperinflation in this century, but a dollar today would buy only 8 cents of what it could in 1945. So they're devaluing the dollar. So they can print more of it and more of it. So there's more out there. And again, it's just like the housing inventory, it's supply and demand. There's more dollars out there. So the value of it goes down. So when you know that, when you can see that, and then that correlation, then you can start to see what they're doing. It's the sneaky tax. So that's why you hear like, oh, my parents, my grandparents, or whoever it may be, bought a house for $12,000, 40 years ago or 50 years ago. That's because we've printed so much money. In 1971, taken off the gold standard, Nixon took us off the gold standard, and then that really gave them the all clear to print money like crazy into oblivion. So it just devalues the dollar big time. We went through the bonds a bit and the Forbes and stuff like that. Russia and China demo. This is just a little bit interesting. Just something I wanted to know. I mean, Russia and China also. The problem, and why I wanted to include them, they're having demographic problems. So a lot of their child policies are not working. They have a lot of issues with what's going on there, and not having enough of one gender and too much of another, so they're having real issues there with their population and what's going on, and a lot of stuff at China, they misreport. Notoriously, they both misreport their numbers a lot. And they don't have the growth that they say they did, and things like that. So how does that affect? And the reason that affects us is we're global now. We're in a global economy. We're so interconnected now that even when they do poorly or they're not doing it as well, that hurts us. So, and it does, everything is just so interconnected, and that's where, getting into it deep and how do things relate, and the dollar and the yen and all these different things, that's what really will, you start to see the writing on the wall and start to kind of solve the puzzle in a way. It's really a big puzzle. 401 Chaos, like I said, this is a great book. I mean, that's one book I could recommend probably to anybody, and that they should read it because most people are in a 401k. And this is, I wouldn't do it justice explaining all of it. It's not a big book. Just read it. It's awesome. I promise you. Like I said in the beginning, you're not going to find, the information you're going to find here is not information you're going to find anywhere. So that's why I think you should watch this. And that's why I hope you share it and you turn on the notifications and you get something out of it. It's an awesome book, and it just goes through the 401k and how it's stacked against you. All the people running it are making the money. They're taking no risk. You're taking all the risk. So, and you're taxed on it. So read that. That is awesome. And like I said, it's not for everybody. Most people might be fine with it. That's great, but at least right? If you don't know what you don't know. So, and paper. This is one of the last things I'll wrap with is no asset class is more invested in, but known least about and least educated in than paper. Stocks, bonds, mutual funds, CDs. No one really knows about it. It's so clouded because of where they're sticking fees here and there and this and that. There's no control. You invest in a company, but you don't have any control in that company. You're not the CEO. You're not one of the employees working there. Very few people. Some people have stock in their own company, but very few of us have that ability to get stock of something, and then they can control the outcome of it. And that's why real estate is really nice, because you can control it. You can control who's going into that property. You control what's being done to it and what's not being done to it. So that's why real estate is so important, because it has not only the tax advantages and the wealth building, but it has control where you don't have control. And yes, you have the market that can go up and down, that's out of your control, but that's the same thing as stock. In stock, you have no control at all. You can pick and choose who you want, but you can't control how they operate. You can't control the market, nothing. So it's the one asset class. So the 4 asset classes are business, real estate, paper, and commodities. So these, the paper class is very few people know about it, and that's why this book is huge, because it'll talk to you a lot about the paper class. And then in wrapping up, I mean, it's like I said, people ask me all the time. I can't give recommendations. It's not something that anyone can do. I mean, no one can do it. The people I follow and I look up to and I'm mentored by don't do it. They can't. No one can. It's something that it's just a continual education process, and that's all it is. But my thing though, and what I believe is, for young and old, I'm a value investor. I'm a cycles person. So what's the undervalued asset and what's the overvalued asset? That's really all I look for. So, again, it's the buy low, sell high principle. That's it. That's all I look for. That's all I do. That's the nutshell. So what is the undervalued asset right now? What is the overvalued asset? The undervalued assets right now are generally commodities for the most part. Different metals, gold and silver, oil, different things like that. Those are the undervalued assets right now. The overvalued assets are stocks, and real estate's getting there. It's starting. The prices have risen so much over the last number of years. So it's great for sellers. Sellers are loving it right now, because anyone looking to sell a house is making good money on it, or at least back, from where they were before, the last few years and after the recession. But stocks are really overvalued. And the way you can kind of see that stuff is you can kind of chart stuff. You can, divide the shares of the Dow to the ounces of gold it takes, to buy, how many ounces of gold does it take to buy one share of the Dow, and things like that. You can measure those ratios and plot them over the years and see where they kind of take you. And it's that's where you can kind of see what's undervalued and what's overvalued. So that's why I'm a value investor. I'm a cycles person. I want to go. I want to, but I would think most people would. They would want to go into the undervalued asset class and then ride it up, and then jump out of the top, and then buy into the undervalued class again. And it's a constant. It's constantly doing this, and you want to keep jumping out. You can ride it up to the top, you jump out, and you jump into the next class at the bottom. So that's where, again, you have to make your own conclusions, but those are the asset classes, and that's kind of what they're doing. Business, the asset class is kind of all over the place, but it just totally depends. And but again, commodities are the low undervalued asset, and commodities are usually inverse. They're usually opposite of the paper class in real estate somewhat. So they're usually pretty inverse. So when stocks are really low, usually gold and silver are really high, and the commodities are really high. So I hope you guys, like I said, please, share it. Share this, tag people in it, turn on your notifications and stuff if you got something out of this. I would love to hear just your thoughts. Private message me things that you want us to do, talk on, or deep stuff. I would love to hear it. Love to hear it. I love talking about this stuff. I love, it's fun for me to kind of to learn who likes this stuff and to who likes to get into this and talk about it. It's really fun for me. But seriously, please, if you share it, tag it. We're gonna start doing stuff. We'll probably start doing some different giveaways for people that tag and share people, share it and tag people and stuff. We're gonna start doing stuff. We want to get this message out there. We want to start really help people. And like I said in the beginning, raise the level of discourse. So I hope you guys had an awesome week, and hope you have a great rest of the day and a great weekend. We look forward to bringing you a lot more content soon.